Foreign exchange trading, often known as Forex trading, gives people the chance to make money by trading various currencies. Forex trading has grown in popularity among investors trying to diversify their portfolios and profit from market changes due to its extensive liquidity and accessibility. This video aims to explore effective strategies and best practices for wealth generation through Forex trading. Before we begin, please like and subscribe to our channel. Understand the Forex market. Understanding market dynamics thoroughly is essential for success in Forex trading. Learn the fundamentals of Forex trading, such as currency pairs, pip values, leverage, and margin needs. Learn about economic data, geopolitical developments, and other variables that affect currency rates. Understanding the currency market in detail is essential for success in Forex trading. The largest and most liquid financial market in the world where currencies are traded is the FX market. Banks, financial institutions, businesses, governments, and individual traders are the main market participants. Forex trading relies on understanding currency pairs because each pair represents the exchange rate between two currencies. To effectively forecast currency fluctuations, traders must examine elements like economic statistics, geopolitical developments, central bank policies, and market emotion. Develop a trading plan. The key to success in Forex trading is to have a detailed trading plan. Decide on your trading objectives first, whether they are to generate revenue now or long-term riches. Determine your level of risk tolerance and set reasonable return expectations. After that, describe your favorite trading approach, including whether you like day trading, swing trading, or position trading. Establish precise standards for entry and exit locations while taking technical indicators, chart patterns, or fundamental analysis into account. Include risk management techniques as well, such as deciding the maximum amount of capital you're ready to risk on each transaction and putting stop-loss orders into place. Review and modify your trading strategy frequently as the market changes. Making informed trading decisions will be made easier with the structure, discipline, and framework provided by a well-defined trading plan. Conduct fundamental analysis. Accurate fundamental analysis is essential for profitable Forex trading. Evaluation of economic data, monetary policy decisions, geopolitical developments, and other variables that affect currency prices are all part of fundamental analysis. Keep up with important economic data, including GDP growth rates, inflation rates, employment statistics, and trade balances of nations that are relevant to the currency pairings you are trading. The monetary policy pronouncements and interest rate decisions made by central banks should be closely watched since they have a big impact on how currencies move. Additionally, keep an eye out for geopolitical developments that may have an impact on market mood and currency values, such as elections, political unrest, or trade conflicts. You can improve your chances of trading successfully in the Forex market by carefully examining these fundamental elements and how they might affect currencies. Utilize technical analysis. One effective strategy for trading Forex is to make use of exact technical analysis. To make wise trading decisions, technical analysis entails examining price charts, spotting patterns, and examining indicators. Start by examining several chart types to spot price trends, support and resistance levels, such as line charts, bar charts, or candlestick charts. Use technical indicators to create trade signals and validate price changes, such as moving averages, oscillators, and trend-following tools. To find potential entry and exit points, pay attention to significant levels like pivot points or Fibonacci retracements. To improve the precision of your trading judgments, constantly hone your technical analysis abilities, adjust to changing market conditions, and integrate different indicators and patterns. To safeguard your funds and control any losses, keep in mind the fundamentals of risk management in addition to technical analysis. Practice risk management. Successful Forex trading requires careful risk management. Long-term success is ensured by putting into practice efficient risk management solutions. Determine your level of risk tolerance by taking into account your financial objectives. trading background, and personal circumstances. Decide how much of your trading capital, normally between 1% and 3%, you are willing to risk on each trade. For each transaction, use stop-loss orders to specify the price level at which you will close the position if the market swings against you. This protects your account from large drawdowns and helps to prevent any losses. Take-profit orders may also be used to protect earnings and control your risk-to-reward ratio. Stay disciplined and manage emotions. Maintaining self-control and controlling your emotions are essential for sustained success in Forex trading. It's crucial to stay to your trading strategy and adhere to your established rules and techniques. Fear, greed, and impatience are a few examples of emotions that can impair judgment and cause irrational behavior. Avoid impulsive trades based on short-term market changes by controlling your emotions. Utilize effective risk management strategies to safeguard your assets and reduce losses. This involves sizing your positions and establishing suitable stop-loss orders based on your risk tolerance. You may prevent emotional reactions to market volatility and keep up a disciplined trading approach by managing risk efficiently. To log your trades and conduct an unbiased analysis of your performance, keep a trading journal. Analyzing prior trades can reveal your advantages, disadvantages, and potential improvement areas. By using an analytical approach, you can make conclusions that are supported by facts rather than feelings. Continuously educate yourself. A key element of effective Forex trading is continuing your education. Because the Forex market is dynamic and ever-changing, it's crucial to keep up with the most recent information and tactics. Read books, articles, and publications about Forex trading frequently to stay informed. Investigate trustworthy blogs, websites, and forums that offer insightful commentary and analysis from seasoned traders and subject matter experts. Attend webinars, online classes, and workshops to increase your expertise and discover fresh trading strategies. Participate in online communities or social media groups to connect with other traders and share ideas and experiences. By keeping up with market trends, honing your trading techniques, and adapting to shifting market conditions, you can increase your chances of success in Forex trading. Utilize demo accounts. For Forex traders, especially those who are new to the market, using demo accounts is a useful practice. Demo accounts provide a risk-free setting where you can develop your trading abilities and get real-world experience. You can become acquainted with the features, order types, and charting tools of the trading platform offered by your broker by using a demo account. You can test various trading methods, manage positions, and practice trade execution without putting actual money at risk. Utilize the chance to investigate numerous currency pairs and track their price changes. To evaluate the efficacy of various trading strategies and indicators, conduct tests. Before switching to actual trading, use the demo account to strengthen your trading confidence and validate your tactics. To replicate a realistic trading experience and get insightful knowledge for your future trading ventures, remember to treat the demo account seriously, as if it were real money. Conclusion: trading currencies can be a lucrative business, but it takes knowledge, talent, dedication, and experience to succeed. You may increase your chances of success by comprehending the market, creating a trading strategy, using fundamental and technical analysis, minimizing risks, and maintaining discipline. Never stop learning new things, adapting to market developments, or honing your trading techniques. Keep in mind that there are inherent dangers in Forex trading, so it's critical to approach it with a practical mindset. That's a wrap for today's video. What are your thoughts on this? Let us know in the comments section below. And make sure to like and subscribe to our channel for more future updates.